So we are coming now to another extremely interesting panel on the evolution of German bank finance for shipping. It's one of the main activities in the German maritime cluster and Germany's contribution to the global industry. I would like to thank Carolin and her firm for sponsoring the panel. And I would like to welcome everybody. I think we have really everyone who is actively involved. It's a who's who of the German bank finance community with us. Special thanks to Philipp Wuenschmann of Berenberg for also sponsoring the event and for your help, Philipp, overall. Thank you very much. And now I will turn it over to Carolin. And again, thank you to all of you for being with us.
Well, welcome everyone out there, of course, to this panel on evolution of German ship bank finance, but most of all, very welcome to these gentlemen here who probably represent the leaders in German ship finance these days. So just very briefly, if each one of you could probably give a short introduction of himself. Philipp Wuenschmann, we'll start with you with Berenberg. I'm sorry, you're still on mute, so maybe we'll start then with Marco with Deka, and we'll go back to Berenberg last then.
Okay, sure. Happy to jump in. Thank you very much, Carolin. Hello, everyone. My name is Marco Albers. I'm actually in ship finance now for 17 years. When I started first with KfW in 2004, and thereafter heading the shipping team of ING in Amsterdam. Since 2011, I'm overall responsible for the origination of specialized lending in Deka. So that includes infrastructure project finance, public export trade finance, but also transport finance, i.e. aviation, rail, and shipping. Shipping at Deka. Deka is certainly not one of the largest shipping lenders, and we are actually also not aiming for it. So we don't want to fill maybe any gaps which came up from exiting banks.
Marco, if I just may interrupt, if we just go on with a short introduction of everyone.
Of course, sure.
Ilias, if you can just say who you represent and what your position is within Deutsche.
Hey everyone, good afternoon, guten Tag. This is Ilias Katsoulis from Deutsche Bank. I'm responsible for our maritime lending activities at Deutsche Bank. And I'll tell you all about DB later on.
Thank you. Jan-Philipp.
Thank you, Caroline. I'm Jan-Philipp Rohr, the Global Head of Shipping for Hamburg Commercial Bank, most likely better known as formerly HSH, and more to Hamburg Commercial Bank in a minute.
Sebastian.
Thanks for having me, Caroline, and also then Capital Link. My name is Sebastian Blum. I'm heading one of two origination teams at KfW IPEX Bank, covering commercial shipping, and then Western Europe, the Americas, and Asia, with my team in Frankfurt and in several other points on offices we have around the globe. And yeah, happy to give some more details later.
Thank you. Jens? You're still on mute, Jens. Jens, you're still muted. Philipp, maybe we can continue with Berenberg then, because you're not mute right now.
Here I am, I think.
Okay.
I should be. Sorry. Yes, good afternoon to everybody, and thank you for the kind invitation. My name is Jens Dose. I'm joint head of shipping of Warburg. I've been here since 2016. Heading the shipping activities together with my partner, Christian Speer. Before that, I was close to 20 years with another shipping bank in Hamburg. And so all in all, almost 25 years in shipping and ship finance.
Thank you. And Philipp Wuenschmann. I hope we can hear you now.
Hello, Carolin. Okay, that's nice, and thank you for organizing this, Nicolas, also to you. Philipp Wuenschmann, 6 years with Berenberg, 20 years of shipping has been my life, ship finance and shipping. Thank you.
Thank you. Now, the topic of this panel is the evolution in German ship bank finance. And in this course, we want to talk about the trends in bank finance, but also in ship finance as such. So we'll talk about alternative financiers, we'll cooperating or competing with you. We'll talk about regulatory challenges you're facing. We'll talk, of course, about ESG, which has been the topic or subject to, I think, most of the panels today already from different angles. And of course, before we want to look into all these, we want to learn a little bit about what you actually do. So the German ship finance market has changed immensely over the past years. I think we all know that. When I started working in this industry in 2006, we had probably the peak of ship finance. In the past 10 years, we've seen, or a little bit more, we've seen a banking crisis, we've seen a shipping crisis, we've seen the loan portfolio of the German banks for shipping going down to 25% of what was out there in 2010. We have seen many banks exiting the ship finance market as such. We have seen others shifting their focus. We have seen changes in shareholders in banks. So we've seen all sorts of changes. And probably to start off with you, Jan-Philipp, because I think, I mean, you already mentioned HCOP was probably better known than as HSH before. And HSH was somehow in the middle of all of this, probably. So it would be great to learn where you stand now. And yeah, the floor is yours.
Thank you very much. As indicated, everybody knows us, I think, out of the past as HSH Nordbank, one of the biggest shipping lenders at that time in 2007, with a shipping book of over 45 billion euros. Today, we still have a shipping book of 4.5 billion. The balance sheet of the bank is much smaller, so we still feel that's a good shipping business is part of our bank. Over the last 3 years, we have done approximately 1 billion of new business each year. Our focus is mainly to lend to direct to the ship owners within the 3 core markets: container, dry bulk, and tanker. Also for this year, we consider to make a new business of 1.25 billion euros. And we see good opportunities in the current market environment. And due to the healthy conditions within the container market, I think all the ship owners which are invested in that market at the moment have very good times and very good years to come. As indicated, we have new shareholders since the privatization. So we are now owned by private equity firms, mainly Cerberus and JC Flowers. I can only say it's a pleasure to have them on board. They are very supportive also for shipping. So I can say it was a long journey, the privatization, but we are happy now to be here and to be part of the shipping industry in Germany.
Thank you. So Jens, I think you've been, or Warburg rather than you, have been standing on the sideline of the ship finance situation for a few years now, and you're about to be back. And so please just let us know on how you have redefined your focus. Who will you be financing? Who is out there who should come to you?
Yeah, thank you, Carolin. I think the fact that I have the pleasure of representing Warburg on this panel today is already a sign that we are somehow back. You mentioned that a lot of banks have gone out of the market over the past couple of years. Warburg has a bit of a DNA in shipping. They have been in shipping for decades. The owners and the shareholders are even ship owners themselves. So they have a strong appetite for that. And when I joined this bank in 2016 with a little team, we kind of reinvented shipping. It was a bit like a sleeping beauty in the old days, concentrating on the domestic market. Since then, since 2016, we have refurbished a little bit our approach. So we are nowadays back in the international markets. We have a completely different approach to ship finance as well as to services for the shipping industry. We are these days concentrating on very healthy and low risk ship financings, which are out there in the market. So it's not a big issue for large companies to get finance everywhere they go, but there is a big niche for smaller tickets between $3 to $25 million. There is a big niche which is left for the small and medium-sized ship owners, and that's what we love to deal with. So we are not playing in the big markets. We are not a competitor to the big guys in the industry. You will not find us in big statistics. But we have been able to grow a very healthy portfolio over the last couple of years. We will further grow this during the next years to come, and we will also strengthen our cooperation with institutional investors who we have next to us in order to grow the business stronger than we can do it with our own balance sheet. So we have investors, institutional investors from the German market who like our conservative approach of financing, risk-averse, low profile.
Okay, thank you. It's something that has come up in the previous panels also, that bank finance has probably become, or ship finance and bank finance and shipping, sorry, has probably become more international than it used to be. In a way, so that German owners are probably looking rather for finance from abroad, as well as Jens, you just pointed out the other way, that you're also looking to international clients. Ilias, Deutsche is heading their ship finance portfolio from London, and does that in any way underline your global approach to this, or is that just by coincidence that you're located in London?
Yeah, thank you, Carolin. Yes, I am indeed based in London, but these days with technology, I'm also everywhere. I'm in Germany. I'm in everywhere in the world. We are a global bank. That's the reality. We have people across the world. We also have dedicated people in Germany, in Hamburg, in Frankfurt. We have people in New York, people that have been experienced in ship financing and have been doing ship financing for a long time. And I encourage people to, contact, if you don't know the local people in Germany, to contact them. So we have a strong legacy in shipping. We've been doing ship lending for many decades, well before I became involved in this business. Some of those people that have been doing it for a while are still with the bank. Deutsche Bank's offering is a bit, I would say, a bit broad. We are able to help clients in the sector, both in the traditional ship lending space, where we're still active, as well as the more complex products. And I'm not just talking about non-lending. I'm focusing on lending in this panel. Clearly, Deutsche Bank as a whole has multiple capabilities through our investment banking side as well, and our capital markets side. But we are open for business. We are a growth business within Deutsche Bank in terms of ship lending. We support existing clients, but we're also open to meet and support new clients. Our offering is not focused on a particular sub-asset class in shipping. It's more down to the transaction itself, the credit merits of a transaction. So we have recently done, for example, transactions in niche asset classes. We've also financed alternative financing providers. So our offering is supporting both institutionals as well as corporates, shipping companies. And Germany clearly is one of our, is our home market, is a market where we are present, as I said before, with people on the ground, and one of the markets that we want to grow from a ship lending perspective.
Okay, thank you. That you mentioned that you're refinancing alternative financiers also, and I understood from our previous discussions, Marco, that Deka is, well, although everyone knows that Deka has a strong link to Sparkassen, and Deka is very much active internationally, and Deka is also active, I understand, in refinancing, for example, Chinese leasing structures and alternative finance structures, so to say. So can you let us know a little bit about that trend?
Yeah, sure. Yeah, it's part of yeah, certain transition also within DekaBank, that we changed the strategy from yeah, old-time ship finance, also KG finance until 2008. Obviously, we changed the strategy very clear towards full recourse focus, so that we targeting the tier 1 shipping names on one side, and around 3 years ago, we decided to focus also more on the Chinese leasing companies. For us, it's a quite interesting structure and business model to work with. Actually, we have quite good experience already from the aviation segment, where actually quite similar structures have been in place already for a few years longer. And based on that experience, we adopted that also for the shipping activities. So basically, what's behind this idea is that you get an additional risk layer with a Chinese leasing company. First of all, I mean, instead of a shipping company, you have as a borrowing base a Chinese leasing company, which is usually also been backed by the Chinese bank behind. So if you look at the larger organizations, you talk about ICBC, BOCOM, and the likes. And we have the opportunity, or we found a regulatory way to apply the Chinese rating to the transaction. So basically, you swap the shipping company rating against the Chinese bank rating, which obviously very much improves the underlying economics. And then, of course, you also look at the project behind the Chinese leasing structure. So the project itself has to stand on its own. It has to be a sound and strong company. The cash flows have to work. And if you put all that together, you have, as I said, a couple of risk layers. You have the full recourse to the Chinese leasing company, which is backed by the group bank. Then you have a bareboat charter with a shipping company, usually even a time charter behind, and then of course all been mortgaged by first-rank security. So overall, it's a very solid project in our view, but with that, obviously, the margins are on quite different levels. So here we don't speak about margins of 200 plus, but rather 100, around 100 basis points. So it's a very tight margin level due to the good underlying risk.
How would you source those projects? Would you source them, or would those be sourced really through the German market and then taking on board the Chinese leasing partners, or would it rather be a coincidence if you have a German owner who is eventually financed under that structure?
Mm-hmm. Yeah, it would be indeed more a coincidence. I mean, there are some German ship owners we speak about, and if they inform us that they may reach out to Chinese leasing structures, they say, look, maybe we can bring this together, because for us it would be good to know that a bank I work with would be behind, just in case, you know, there are some waivers or other issues, so that maybe not a problem involved with a bank, I don't know. But in principle, it works that the Chinese execute the project with a shipping company, and then actually only a little later reach out to banks for refinancing. So it's a bit more of a passive involvement. But of course, I mean, if we see projects which involve clients we have already in our portfolio, it is no problem to speak to the shipping company to inform them that we are backing them indirectly through this Chinese leasing structure.
Okay, that's interesting. Sebastian, you're you have financed backed completely different. You work a lot with ECA-backed finance structures. So maybe you can tell us a little bit about that and what sort of projects you're actually supporting right now.
Oh, sure. So as the background of KfW is known to most of you, so it's the German government bank, and KfW IPEX Bank is the commercial arm. So we're coming from the export and project finance field. And we're active in shipping for also more than 40 years. And at the beginning, it was more like supporting the German export industry from the yard side. So working with the German ECA mostly then on ships built in Germany, that's still something we do very successfully. And it's still 50% of our portfolio is cruise ships. So that's still something which is very important for the German maritime cluster. But we also support other European and German equipment suppliers by financing ships built in Asia, but based on the European and German content. That's why we're also working with other European, but also Asian ECAs. And then the clients we target, they have to have a good and solid balance sheet, a valid business model, and we're focused on new builds, especially because of this export background. We also do retrofits, and we also interact very closely with the German Shipbuilding Association. We have a joint a venture which is called GMAX, where we also try to then maximize the German package in ships built in Asia. So that's our let's say focus, and we try to finance with a long-term approach over the cycle, and that has been proven to be a good thing. Also during the shipping crisis, our portfolio is currently standing at 14 billion euros. We did around 1.4 billion of new financings last year. That's maybe a billion less than normally because new cruise ships haven't been ordered, you can imagine. But commercial shipping was quite good and strong last year. So yeah, that's what we normally do.
Okay, thank you. Philipp Wuenschmann, I think you have to unmute yourself before you speak. I think because you had been muted by Capital Link. Can you unmute? Okay. Then could the technical support probably unmute Philipp again? Because Philipp, your bank has been working with completely different structures in the background for a few years now and has a lot of experience with institutional investors in particular. So it would be great to hear something about that. Annie, could you please unmute him?
Philipp has to unmute from his side. Philipp,
No, Philipp, are you now?
Philipp is unmuted.
Can you hear me?
Yes, now we can hear you. Thank you.
Okay. Good. No, thank you. I think we have already agreed here that the decade of debt restructuring is over, and I think it's good today to see a German panel of banks speaking about the future. Yeah. It has kind of normalized, and I think 2020 was a very important year in that respect because we didn't produce new bad headlines, and it was a kind of proof of concept for the outside world to see that shipping is something worth looking at again. And this is something, as you rightly pointed out, we very much work with investors, institutional capital from German sources, and we do this since 4 or 5 years. We started with secondary loans when the opportunity was there. We then educated them into primary loans for ship owners in Germany, in Greece, somewhere else in the world. And last but not least, we also figured out that teaming up between the alternative lenders, so between the maritime debt funds and the more traditional financing houses like ourselves makes a lot of sense. And maybe this, as Marco puts it for the Chinese leasing, the same goes for the alternative lenders. You know, they are backed by traditional finance, which is kind of helping them to achieve their return by giving them some kind of super senior or senior back leverage. And this is something we started to do in 2019, and we also did last year. And I think it makes very much sense because it also helps the owners to bridge the gap, which might be still there on the equity side. So if you have a traditional 50% lending and a 20% equity, then the 30% might be offered by that kind of alternative lender with us in the background. And I think that's something where there's real value in it, and where maybe the German banks are see a way forward to also to play a role for the industry.
Okay, I think this the alternative lenders bridging that gap, so in a way cooperating with the traditional lenders in order to support projects. On the other hand, Ilias, I understand you're supporting projects with alternative lenders as mezzanine, or supporting mezzanine finance, junior loans, and so forth. Would you see alternative lenders there as cooperating partners, or rather also competitors in a way? And probably not so much for Deutsche Bank competitors, but competitors to other banks you see in the market?
I mean, direct lenders, maritime funds are now part of the funding landscape for shipping. They have a very important role to play, and I think they're generally composed of very experienced people that have been doing shipping for a long time. So they are not speculators, so they're not just there to temporarily take advantage of the current market. But the reality is that there is a gap left by banks. Banks kind of tend to focus these days to kind of higher credit quality counterparties, bigger transactions, modern vessels, and so on. So there's a real gap and a real need for direct lenders to stay in the industry and participate in the industry. For us, they are, as a bank, they are, we see them in the market as in transactions where we can support them through kind of financing them. We can, do deals with direct lending funds together as well. So we don't necessarily see direct lending funds as competitors. We are predominantly competing in the senior secured space. But as I said before, our product base is slightly more diverse than a traditional bank. And we have the capability of doing more complex structures, or being participants in some of the structures that direct lending funds in some occasions do. Okay. So I think overall, I think that, they are here to stay, and they are an important part of the infrastructure.
Yes, and they certainly are. And Jens, you mentioned before that your focus is really also to actually involve alternative lenders or institutional investors. Do you have a certain focus on kind of investor you are looking?
Well, our focus is so far very much on German institutional investors, pension funds, whatever is there. And we have done a number of transactions also recently again, and we are in discussions currently to further increase this. We see, due to the interest rate environment which we have, that there is a high need for any kind of asset-backed investments on these sites. And shipping is certainly an area which has become into the focus, and which is becoming more and more important for these investors. So touch wood, yes, that's very much important. It's though a matter of fact that these people need kind of a debt asset manager. So they need somebody in the background who is selecting the deal, who is structuring the deal, who is doing all the risk management and everything. So they need a debt asset manager, industry expertise, and a track record to manage these assets. And this is our offering. So for us, this is a perfect approach. We are in the middle of two client groups, institutional investors on the one side, which we have a lot, and where we play a strong role in the German market, and the shipping community, which is our hard field anyway.
Okay, that's interesting. Now, if we move a little on to the challenges of what is out there from a regulatory side. I mean, all of the banks are aware of the Basel IV criteria that are out there and are about to, step by step come into force and affect all of you and the finance market. Ilias, I heard that the city head of shipping, Michael Parker, actually said that, well, if Basel IV would in fact come into force the way it was proposed, it would kill shipping. Can you underwrite that, or are your views a little different on that?
Thanks, Carolin. I think the implementation of Basel IV, when it comes in place, will clearly affect the determination of capital requirements for banks. So it will make a difference, from a banker's point of view. I think, though, that the shipping industry is an industry has gone much worse change before, and will again find a way around this issue as well. We don't know exactly how what the final impact will be, what the pricing impact will be, how the market will adjust. But banks are good in making sure of looking ahead, basically, when it comes to those type of regulatory changes. And for example, we've seen banks in the last few years, as we were saying before, focus a bit more on larger clients, therefore leaving a bit of a gap for alternative financing providers. So all that stuff are linked together. So I think bottom line is, in my view, is the market. Banks will stay available to finance the shipping industry going forward, irrespective of kind of that type of new kind of regulatory change coming through.
Okay, so the bottom line is shipping is always able to adapt in a way to volatile markets wherever the volatility comes in. Now, what we already get through the Q&A section here with the conference provider is why aren't we talking about environmental issues? What about Poseidon principles? What about ESG? This is exactly what we were about to come now, and this is partly regulatory, because all of us know about the EU Commission's Green Deal and what comes out of that, the taxonomy that has been issued, the guidance to the taxonomy that is under discussion. We have the central banks signing up to green principles for refinancing and all that sort of thing. Marco, how is DECA addressing ESG issues in your ship finance? Are you looking at sustainability issues? Are you looking for green lending? What is your focus here, and what do you impose on the borrower side?
Yeah, first of all, I mean, shipping or green shipping principles are a part of our DekaBank overall sustainability corporate governance. Something as one of the large German asset managers we implemented already about 8 years ago to comply with requirements from institutional investors from our asset management activities. On the shipping side, we have not signed up for the Poseidon principles, but we implemented our own specific shipping ESG principles around 4 years ago. So yeah, these principles are voluntary, self-regulatory, a commitment, and it's a part of our risk policy. So in these principles, we include all the compliance with IMO, ILO, IX, only payers, MOU members, Hong Kong Convention, but also we focus in these principles. We have a clear focus on financing energy efficient vessels. I think that's a very major part in it. But we also focus on financing vessels or retrofitting, slow steaming vessels designed for reduction of CO2 emissions. If you compare that with the Poseidon principles, we actually also have set up our own measurement to measure the carbon footprint of our shipping portfolio. We decided here to use the EEDI as the index, so the Energy Efficiency Design Index. With that, we are able to control our shipping portfolio over the time. In parallel,
sorry to interrupt, but is this an internal controlling, or I mean, one important thing about the Poseidon principles is of course the reporting part, right?
Yeah, no, I mean, of course, we need the data from our clients, similar to how the Poseidon principles will work. So if you execute new loans, you will have an additional clause asking for this transparency given by the ship owner. Besides that, the EEDI technical data you can also get from external sources. We are also teamed up with Maritime advisors here, Best Ship in Hamburg, who will support us in all these assessments. But what I wanted to say in this respect is, while EEDI and measuring the shipping portfolio is one part, but then also going forward as a further development, we introduce a so-called ESG Scorecard System, which goes beyond the pure green shipping measurement, because here it includes also the S and the G, so the social and the governance aspects. Bottom line, as a result, if we arrange new deals today, this scorecard has actually to be on green. Otherwise, we would not be able to do the loan. So it's not only...
So it's really about the ability to do the loan and not so much about pricing or other mechanics.
Yeah, well, pricing obviously is also one part of a credit decision and the quality of the shipping company. But even if you tick all the boxes of a perfect shipping deal, if the scorecard result is not green and does not tick the ESG criteria, we will not do it.
Okay. Philipp Wuenschmann, I think you again need to unmute yourself, unfortunately. Given your experience with with the investors you cooperate with, would you say that they, as in capital, is actually driving ESG, or probably also predominantly the E as in ESG as the environmental part? Can you unmute yourself? And I learned, unfortunately, from the organizer that they can't unmute yourself. Unmute you. Okay, then I might hand over to Sebastian. Sebastian, you mentioned before that you're now Philipp is there.
Yeah, okay, sorry. There seems to be some overlap here. I'm sorry for that. No, I think Marco has said a lot of things, which also goes for Berenberg. I think ESG today is a mainstream topic and is already implemented in the wider bank, also with Berenberg since quite some years. The question is, how do our investors look at this topic? And the unfortunate answer is that the starting point is very negative, because I have to say that the Greta Thunbergs and all this movement has created an atmosphere where the blue ocean is becoming dirty by the dirty shipping industry. And I think this is the mainstream perspective which many people from the outside have. And I think the shipping industry has to start a big marketing activity to convince and to tell people that the transport of goods throughout the seas is still the most CO2 efficient way to transport goods. There's no other mean today. So this is the starting point of any discussion. Many investors today just start to report on their portfolios, and they start asking questions. So I would underline what Marco said. We will require more data from our clients as a first step. And also we have developed a few categories, key KPIs, and also are working on a kind of a rating system here to put this in place. But for now, it is only the starting point, and I guess that 2023 in the EU will be a very important year because then measures become more commitment from everybody. And I think this is, let's say, the way we talk about. And as we define in second-hand tonnage, we still want to do this because we think this is compliant with sustainability. We have to convince people that this is something which still is a better solution than many others which are available today.
Okay. Sebastian, KfW IPEX is financing a lot of ECA structures. And how does that also work or tie in with the idea of green shipping and green loans? Would you just look at new builds? And in how far can you actually assess what is going to be green within 10 years' time? Because at the moment, I mean, we don't have any transitional period under the taxonomy. Or would you rather look at short-term finance of retrofits as green projects?
I think to attain the objectives which have been set now and which hopefully get a bit more ambitious in the future, you need both. So you have to look at the existing fleet, as Philipp rightly pointed out. You can't replace the fleet from one day to the other. So I think retrofits are playing an important role. I think the numbers are about that 10 to 25% of efficiency can be gained by different measures. That's a new propeller that's doing a lot of other things. That can be wind solutions, which Oldendorf and others are testing now. So I think there's a big, let's say, opportunity, and especially then for European suppliers to come up with smart solutions. And then we have to finance them with also, once again, smart solutions. And then ECA can play a role here. So first of all, we did this already. I think we closed around 700 million of retrofit financings in the last 3 years. For scrubbers, but also for propellers, ballast water treatment systems, and so on. And it's EHLERMANN covered, it's GA covered. There's some Asian ECAs as well, which are interested in doing this. So we just have to find the right way then to put it into the balance sheet of the ship owner. Sometimes with unencumbered vessels, sometimes you can do it also without any, let's say, other security. So I think that's important for us, and we do this. That's normally 3 to 5 years, maybe, retrofit financing, and then we go on with our traditional ECA financings, where we use the usual suspects in Asia and in Europe. That's normally the 12-year down to zero financing. Sometimes you have a commercial tranche on it. And in this case, the ECA protects you as well from the technology risk, because at the end, you're going to a new propulsion. We finance, for example, the CMA LNG vessels. We got a huge discount on the vessels when we talked to our security guys, because they said there's no market for this vessel, and we don't even know whether there will be the right infrastructure. Now we see others are moving in this direction as well. So now it is kind of a proven concept, and then the ECA guarantee gives you a lot of comfort when it comes to pricing and your risk assessment. So I think it's a very good combination, especially for new technologies to use this.
Yeah, so there is really still there is a risk out there in financing new technologies without that security, and even more so without any transitional period regime under the taxonomy. Yeah, Philipp, I think HCOP has not signed up for Poseidon, but you have signed up for the ship recycling standards as one of the private initiatives of lenders out there. And would you actually think that that sort of private initiative is enough in that respect to promote ESG in finance, or the E in ESG in finance? Or would you say the regulation that goes with, for example, the taxonomy or other instruments is required because it would also serve the acceptance in on the borrower side?
I think, yes, we just have joined in December last year the RS standards, meaning that due to the fact that we have focused over the last years most likely on second-hand tonnage, due to the fact that new building tonnage was most likely not within the banking market, more on the leasing side. There were no room, at least for us, to participate in that financings to improve the age of our portfolio. So we have now reached an age of 11 years in our portfolio, and therefore we think it's also only a part to focus what are the standards for recycling of ships, and we think it's the first step. It's part of our ESG strategy, but it's not the only part of the ESG strategy. So we will also focus how ship owners can improve the CO2 emission within the portfolio, due to the fact that it's also part of sustainability to run the vessels not only until they reach 12 years or 13 years, because we also have to consider to build a vessel will also consume quite a lot of CO2 emission. So it's rather to consider how you can improve the existing CO2 emission via retrofit, via reducing speed, slow steaming, different fuels, better fuels, and we want to be part of that. So if I look into the future, ESG has developed quite quickly to be very important for everybody, not only for ship owners, not only for banks, but also for our investors who are investing into the bank, meaning on the bond side as well on the equity side. So it's just a starting point, I think, for all of us within the industry. But I also take the point from Philipp Wuenschmann. Shipping is the most efficient way to transport goods, and shipping industry don't have to be shy to promote this part, because we are all living in a globalization, and it's the major part of the industry at the moment.
Okay, thank you. We're now coming to the final call, and we have to combine two issues here now, and because we're running out of time. So that is COVID-19. The impact of COVID-19, where we see the European Banking Authority to expect a huge amount of NPLs. At the same time, Hapag announcing an increase in its EBIT for 2020 that is immense. And so what is your expectation for 2021, considering the COVID-19 situation? Philipp Wuenschmann, if you can start very quickly, very briefly, just very few words, please.
Okay, now I think you see us quite excited for this year. And as I said, with this proof of concept year 2020 in the background, and a lot of good news from the Maersk, from the Hapags of the world in the second the second half and up until now. From the tanker side, obviously more in the first half of last year, but and now a bit in the negative. We expect this to remain for a while. But for bulk and containers, we are quite positive for this year, because we expect, if the world economy starts to regain power, then we will see, first of all, more production, and secondly, don't forget the big consumer savings which are in the world. And if you see just one example, the US have saved 10% more than the years before. So then this will also be lead to transport over the sea. So we are positive.
Yeah. Thank you, Philipp. We're really running out of time. I'm sorry to interrupt. Jan-Philipp, what is your...
I fully agree to the points from Philipp. I think a good year is coming for the shipping industry. It might be difficult for the cruise until they restart the business, as well for offshore. But for the three core assets, container, dry bulk, and tankers, we see good market conditions.
Well, thank you. That's a wonderful end to see good market conditions. I hope none of the others would have objected. And Nicholas, thank you very much for hosting us. Thank you to Capital Link.
Thank you also from our side. It has been a pleasure.
Thank you very much.
Yeah, I forgot to unmute myself. I was saying thank you very much. It's been a great privilege to have everyone on board. Thank you very, very much.
Thank you. Goodbye.
Thank you.
Thank you very much.